Have you ever bought an asset like a stock or a piece of real estate and within few months you totally regret your decision? Do you have to sacrifice the most happiest moments in your life to advance in your career? And do you feel that none of the common investment strategies work for you? The answers to all this and a lot more financial wisdom can be found in the book The Psychology of Money by Morgan Housel. If we can find a common denominator in happiness, a universal fuel of joy, that's when people have more control of their lives. For some, the freedom to sleep until Monday afternoon and not have to go to work, that's happiness. And for others, the freedom to be with the family, that's happiness. So we know what can make us happy. We think we have the free will to do whatever we want with our life. Still, we keep missing those events that can make us truly happy because we have to be at somewhere else at the same time. We love to have more control in our lives. We know that can bring more happiness. And there is one way to buy this control, by having more money, but not the way we normally use it. We should use the money to buy time instead of buying luxuries. For example, if you hate doing laundry, you can use your money to outsource this task to someone else and use that time to do something that makes you really happy. If you can and if you have the option, then think of reducing your working hours to spend more time with your family and friends, even if that means you earn less. When older people were asked about their happiest moments in life, most of them said they valued the things they had the luxury to do because they controlled their time. I first learned about compounding in my 8th grade. My maths teacher passionately explained it to the class, but I couldn't care less. Then at the age of 22, one of my best friends spoke to me in detail about it. Again, I didn't care. And after almost a decade, I see the wisdom in both of their advice. If I had started investing at the age of 22 and then consistently invested over the past years, there's a strong chance that now I would have been more financially sound. Housel explains that if something compounds, if a little growth serves as the fuel for future growth, a small starting base can lead to results so extraordinary they seem to defy logic. James Simons and Warren Buffett are the world's best investors. The annual rate of Simons have compounded at a rate of 66% since 1988, and this rate for Buffett is 22%. That's 3 times that of Buffett's investment. So ideally, Simon should have more wealth than Buffett. But Buffett is 75% more wealthier than Simon. Simon's got to this 66% rate when he was at the age of 50, while Buffett started investing when he was 10 and has been earning 22% on average since then. There are over 2,000 books picking apart how Warren Buffett built his fortune, but none are called "This guy has been investing consistently for 3/4 of a century." But we know that's the key to majority of his success. Few people would have ever heard of him if he started investing in his 30s and retired by his 60s. His skill is investing, but his secret is time. So invest as early as you can and let the power of compounding do the magic. I really admire facts or thoughts that change the way I see the world. And what I'm going to tell you is one such thing from the book. It always surprised me to see people rushing to close their home loans by paying off the mortgages before the set time period. The interest rates on home loan are so low nowadays. If you have some extra cash lying around, the most logical thing to do is to invest in the stock market where you get an 8% return instead of just closing your home loan where you have to pay just a 1% interest. So by paying off the mortgage faster, you are losing money, and it didn't make any sense to me. What I missed to understand is that buying or owning a home is not always a logical decision for most people. We are emotional creatures with emotional needs and not rational decision-making machines. So we have to always consider this emotional side when we make financial decisions. For example, you decide one day to quit your job to start working on your passion. You have saved enough money to support yourself for another 2 years. And you may think you can weather any storm when you start such a journey because you are well prepared. But when you start spending from your reserves, when you see that numbers getting reduced in your bank account, then your emotional side will kick in. Only when you experience such a downturn, you will know exactly what you will do and how you will behave. So always be mindful of this emotional side and develop a sensible strategy. Make money decisions that let you sleep peacefully at night, even if it doesn't bring you the best returns. Take a look into the past. Think for a moment about how you were 10 years ago, the opinions and viewpoints you had, and all the dreams you wanted to achieve. There is a good probability that those have changed considerably in the past few years, and we understand and recognize this change. What we fail to consider is how much we are going to change in the next 10 years from now. This is called the end of history illusion. For example, when you were in college, you would have thought about traveling all around the world and to have new experiences, and never would have thought about settling down or buying a house. But probably now that would have changed, and you would want to have a family, buy a house and settle down. And now if you are thinking there may not be any major changes in your wants and needs in the future, think again. It's always possible that you might want different things from your life in the next 5 to 10 years. But we always underestimate these future changes because change is scary when it's not yet happened. So it's easy to look into the past and see the changes than to look and prepare for changes that will come in the future. So according to the author, when you make financial decisions, it's always better not to go to the extremes to avoid bigger regrets. The more you realize that your views and needs could change in the future, the lesser regrets you will have. If you want something, you have to pay the price. When you walk into an Apple store to buy an iPhone, you have to pay the price on the box unless you plan to grab the phone and run away with it. And the concept is similar for the stock market, but the price you have to pay is not the actual stock price or the brokerage fees. It's the emotional price that's demanded by the markets. There will be down periods in your investment journey where your portfolio could lose 50 to 60% of its value in a single day. But if you panic and quit, then you won't be able to reap the benefits that stock market has to offer in the long term. You can't win a football match by hitting the ball out of the ground. Like every game has its own rules, every person has their own goals, and their strategy will be based on their personal goals. So if you don't know exactly what your goals are, you could get caught up chasing after other people's goals. Investors often innocently take cues from other investors who are playing a different game than they are. You need to know why you are investing and what you want from your investments. Are you looking for some quick returns, or are you someone who is investing for the long term? Once you discover your financial goals, you will have a far easier time ignoring all these advices that are irrelevant to your needs. For example, buying an overvalued stock may make sense for a short-term day trader as they will close the position at the end of the day. But if you are an investor who buy and hold stocks, buying a richly valued stock might not do any favor for your investment portfolio in the long term. Never invest in something because everyone else is doing the same. Invest because you know the opportunities and how they align with your plan. One good investment you can make is to head to Amazon and buy the actual book and read it for yourself. I will leave a link in the description below. If you like the video and want to see more similar content, then think of subscribing to the channel. Until I see you next time in another video, ciao.